Hello everyone and welcome to the daily crypto market review. Obviously starting with the BTC chart today. Today we saw a decent rally in Bitcoin. Right now I am viewing the hourly chart. If you see on the hourly chart, the volume was decent enough, and I originally told you that if we have two major things here, if the volume is decent enough and if the 21,800 or even 21,500 support acted as a strong support, then we can definitely see a bounce from it. If you see, yesterday we saw a decent bounce. First of all, we started to go down and then we bounced off back above it. As we already know that yesterday was the weekly closing, and obviously Bitcoin would have to show where it's headed the next week, which would obviously be confirmed when the stock market open, which we will be discussing in a bit. Moving towards Bitcoin back again, I am seeing right now we have been marking the 21,800 as a decent strong support for the early time frame. However, I'd be really curious to know if Bitcoin can really test or even break 23,000 support resistance on early chart and even close a candle above it. Moving towards 4 hourly chart, if you see on the bigger perspective, if you are seeing this, I usually have marked these pathways as a prediction to my analysis, so that you guys know that that is what we predicted in the last market update video, and you will be knowing this that beforehand this was supposed to happen. Right now you are seeing all the candles, the bodies of the candles are closing below $22,250 level. If we manage to break this $22,050 level, then we can expect a breakout towards 22,500. However, we haven't closed any body of 4 hourly chart time frame in above 2250 to $22,500 range. There is no body of any candle. If we break this with a decent amount of volume, as we have been seeing volume right now, compared to a few days back, you see the volume is also increasing in the market. If the trading volume is decent enough, as well as the 22,250 level will flip into a support, and we can see the breakout towards $23,000. And if we see 23,000 breakout level, then the next major resistance, if we are talking about the major resistance, then our next major resistance in the region of 28,600. This whole area is having a very less resistance to the upside motion. However, the psychological resistance level, if I'm supposed to mark here, can be at $25,000 level. But in macro perspective, if we move on towards the Bitcoin weekly chart, since yesterday was our weekly closing and we got a not very decisive candle here, as it's a doji. You can see the weekly closing was observed at 20,798. That's approximately $20,800, and the opening was at 20,861. So basically it formed a red candle, but the red candle was not really strong like the previous red candles which we observed on the week of 13 June and 6 June, as well as the previous ones. So right now we are seeing the RSI level of the Bitcoin is cooling down. So that is exactly what I had to see, that Bitcoin will have to cool its RSI level. If you see, Bitcoin has never been, in approximately 10 years, Bitcoin has never been this oversold in a weekly time frame, which we have been seeing from 6th June to 11th July. So now we are finally in the zone above 30 RSI level on the weekly time frame, and this could indicate that we are now no more overs on the oversold level, and this can, I'm just saying, this can lead to further potential downside for the Bitcoin on the weekly time frame. However, since the market momentum is building up, and even if you see the weekly time frame volume, the volume is even on the buying side, the volume is decreasing. If you see, this green candle was bigger than this green candle, that means the buying was lesser in this candle. However, for this week we shall definitely have to wait for this week closing in approximately 6 days and 9 hours from now. If we even close this candle in green, we could see further cooling of the RSI level, and even if RSI level manages to the level of 35 to 40, then we can expect further correction in the market, as we are still in the bear market zone. Since if we see the chart, then we are still in the 100, below the 100 EMA and the 200 EMA. If I see moving averages, let's see 200 weekly moving average. So yeah, we are still below the 200 weekly moving average, and the exact resistance would be 22,700. If we move above this strong resistance level, then this resistance could flip into the support that is at 22,700 level as of this week. Then we can see further upside from here. However, if we see on the bigger perspective, we are forming a very specific pattern on the Bitcoin daily time frame. If you see, we are clearly forming a bear flag. And what are the specifications of the bear flag? It is a flag pole and then followed by a flag pattern. The major resistances and the bounce off levels which we can see that Bitcoin may reject from the level of right now, which is approximately at $23,000. If we see the major rejection level for BTC can be really at somewhere here, that is we can say $23,000, or even if we break briefly above this and extend this channel. Yep. So now if in order to reach to $25,000 level, we need to have at least wait a month. If just in case Bitcoin breaks out of this channel, then that would be a confirmation and an invalidation of this bear flag pattern, and we can expect a further breakout and moving to the upside of the Bitcoin due to two reasons. The first is this resistance of 200 weekly moving average will turn into a very strong support, and the second reason being Bitcoin will invalidate this large bear flag formation on the daily time frame, and that is where we can see the breakout towards the upside from $25,000 level. As I previously mentioned, there is a very small resistance between this region, between the region of 28,500 to 25,200. However, I still expect Bitcoin to bounce back from this resistance level of 200 weekly moving average or the resistance level of $23,000. Moving on towards Ethereum. Ethereum has been performing really well from the past weeks, or you can see on the 4 hourly chart we are seeing decent amount of volume in Ethereum, and Ethereum just break down the resistance of from which it bounced back, and now it's at $1,481. It even reached $1,500 level today. If we see on the larger time frame and even use the exponential moving averages and use the daily time frame, Ethereum has clearly broken the resistance of 55 EMA today as well, and the 55 EMA resistance was at approximately $1,444. And if Ethereum closes a daily candle above the 55 EMA, then we can expect further more upside from Ethereum, considering Bitcoin stays above the level of $21,500 level. And this is very important to consider as we are expecting a bounce from this resistance level, since it is a very strong resistance of due to the reasons mentioned. Moving on towards the stock market. The stock market and the dollar currency index. Today the stock market is in green color. The stock market opened above the level yesterday. It closed from the level it closed last week. Right now the stock market is at resistance, and this resistance had rejected Nasdaq, S&P 500, and even Dow Jones. If the price action of the Nasdaq, Dow Jones, and S&P 500 rejects from this resistance for the third time, then we can see the breakdown of the stock market as well as the cryptocurrencies. But right now we are waiting. If the stock market breaks the resistance of, let's say on Nasdaq it is at 296, on S&P 500 it is 3914, and Dow Jones it is at 31538. If this resistance is turned into support, which would be definitely after breaking to the upside, then we can see the stock market would continue its way upside. But the question is why the stock market is rallying. The answer is very simple. The dollar currency index is taking a breather or correction. We have seen in the past 2 days dollar currency index hit the high of 109.23 level, but right now it is taking a deep correction, and the correction is approximately 2.18% to the downside. And right now we are at dollar currency index of 107. However, today's low was at 106.89 points. This is overall review of the market. You need to know that we are still not bullish, we are still in a deep bear market. And if you see the pattern of the bear flag, this is how a bear flag pattern is formed. This is the flagpole. Then we have three legs. This is not a definite thing. This can even have two legs, but right now we have one, two, and the half leg of the third phase. If we see on the daily time frame, we already have one, two, and this one half. This is where I'm saying that we can reject. And if we reject, as we have global macroeconomic situation going on, as well as the stock market situation we just discussed, if it's bullish, then we can see the invalidation of the pattern at a level of $25,000. And if the pattern remains valid, then we have to see the rejection at the level of 23,000, or even at the level of 22,700. That is our 200 weekly moving average. So this is the overall scenario of the market today as of now. If the update was helpful for you, please hit the like and subscribe to the channel. Thank you for watching. Bye bye.